Good morning, everyone. Myself, Dr. Khushbu Pandya. Today, our topic is what is taxation and different types of taxes. Now, the question arises, what is tax? So, tax is a source of revenue to the government, okay, for funding, for development of infrastructure, welfare projects, education, okay, medical facility. So, to provide well-being for the citizen. Now, there are two types of taxes, direct tax, indirect tax. What is direct tax? A direct tax is tax on an income of an individual. The burden of tax cannot be shifted to the other person. For example, income tax, profession tax. Indirect tax. Indirect tax is tax levied on goods and services. Burden of tax is shifted to the other person. That is GST, custom duty, etc. Now, income tax. As per Income Tax Act 1961, it is levied on total income of a person earned during the previous year. There are five heads of income: income from salary, income from house property, income from business or profession, income from capital gains, and income from other sources. Income from salary. Whatever income received from the relationship of employer-employee would be taxable over here in this head, income from salary. Income from house property, rental income, income from business or profession, that is profits or gains, okay, as well as professional income earned. Capital gains, transfer of capital assets. And the last head, that is income from other sources. Whatever is not covered under the above four heads would be under the last, that, for example, royalty, interest income, dividend income, and so on. Now, the few basic terminology. First would be definition of person. So person means individual, HUF, company, firm, association of person, body of individual, local authority, artificial judicial person. Okay. So the definition of person, per each and every person is liable under the purview of Income Tax Act 1961. Previous year. It means financial year immediately preceding the assessment. It is also known as the year in which income is earned. Assessment year. Assessment year is a period of 12 months commencing on 1st April every year. That is the period, the year in which income is taxed. Assessment. Person of process of computing income and tax on income. Assessing. It means a person by whom any tax or any other sum of money is payable under the Act. Now, the question arises. Okay, on which income would be taxed, which income would be taxed, that is Indian income or world income. So for that, first we need to know the residential status of an individual. What is the residential status? Okay, now for that we need to see few conditions. If the condition is satisfied, then the status would be resident. So that is first basic condition. The stay in India for 182 days or more in current previous year. So in the particular previous year, a person has to stay in India for minimum 182 days, or stay in India for 60 days or more in current previous year, okay, and 365 days or more in last 4 years preceding the previous year. So if first basic is satisfied or second basic is satisfied, then the status would be resident. But if an individual fails to satisfy either of the basic condition, that the status would be non-resident. If the status is non-resident, no need to check additional condition. But if the status is resident, we need to check further additional condition. That is, a resident for 2 previous year or more in last 10 years and stay in India for 730 days or more during the last 7 previous year preceding the previous year. If an individual satisfies both the additional condition, then the status would be resident and ordinary resident. But if additional conditions are not satisfied, then the status would be resident but not ordinary resident. Okay. So this is a computation of income tax. That is a total income. That is from all the 5 heads, the income would be taken. Total, that is a gross total income. And then we need less deduction under chapter 6A. Okay, that is net taxable income. On that, tax percentage is calculated. Okay, so thank you all.